Hey everyone, Tesla reported second quarter 2023 earnings, and in the conference call or during the conference call, Tesla CFO issued a sort of warning to Tesla stock investors. Well, you could consider it as a notification of upcoming massive investments to support its growth. So let's take a look at that in this short video here. So let's get into it. So the CFO saying the single most important priority is to ensure we are continuing to invest heavily in the core technologies that will drive the long-term value of the business. This includes increasing spending on AI related technologies such as full self-driving, Optimus, Dojo, as well as new products such as Cybertruck and our next generation platform in the semi-truck, as evidenced by the continued growth in our research and development spend. So in other words, the CFO telling investors, like, whatever you thought we were going to invest for our growth, we needed to step that up. We needed to increase that to support the long-term value of the business. We need to maintain these because we're not just doing it because, we're being wasteful. No, they're not doing that. They're doing it because they see a good return on investment potential for that spending. Typically, companies will do that if they see great opportunity ahead. They will go ahead and spend that money because they can get a good return on that investment. So when you have companies like Tesla that have done a good job in terms of allocating capital, they haven't been wasteful. So you want to see them find opportunities to spend that money, to allocate that capital, right? It's like the opposite. If you're investing in a company like Redbox, which is a physical DVD rental company, you don't want to see a company like that invest more in the business. You want to see them divest from the business, right? But a company like Tesla that has all this excellent opportunity ahead, you want to see them increase that investment, find more opportunity to allocate capital because they're going to get a good return on that investment, right? That's what investing is. You put money to get money, but you want the getting to be more than the input, right? So that's what Tesla is essentially telling investors here. So they continue with meaningful capital expenditures to lay the foundation for the future. And their aim is to maximize volumes on both their vehicle and energy business, but most importantly, doing so in a way that generates capital to continue the pace of research and development and capital investment. So what the CFO again is reiterating here is, yes, we want to maximize volume and maximize sales, but we also want to do so in a way that generates enough cash flow so that we can reinvest in the business. So we need to generate cash flow because we want to reinvest in the business. We have a lot of research and development projects that we need to put in billions of capital. So we need to generate capital from these sales. We can't just lower our prices infinitesimally lower where gross profit margins are, relatively flat. No, we can't do that. We need to maintain a sufficient amount of gross profit and operating profit so that we can generate cash to invest in these growth areas. Otherwise, we'll need to pull back on those investments and we won't have future opportunities coming in. So already I will show you what that has meant. Tesla's price cuts and rising competition has led to a falling gross profit margin. You can see here total gross profit margin peaked at 25.1% in the third quarter of 2022, and in the fourth quarter of 2022 is when really the price cuts started late in the quarter, and that's when the gross profit margin started falling from 25.1 to 23.8 to 19.3 to 18.2, and it's 3 consecutive quarters of decline here, and I wouldn't be surprised if this continues lower. Similarly, with the operating profit margin from 17.2 to 16 to 11.4 to 9.6, and again, I wouldn't be surprised if that continues lower. Although what it seems like the CFO is saying is we're not going to just let it get to zero or negative. We're going to be willing to accept lower margins, but to a certain point because we still need to generate profit and cash flow to reinvest in the business. So this is essentially what the CFO is telling investors, kind of issuing a warning. Hey, we need to get into this investment cycle. There's a lot of opportunity here that we need to invest in to fulfill our long-term goals, to capitalize on these opportunities that we see in front of us right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.